Greetings, members one and all of the Salivation Nation. Gold and silver prices are up a bit as of the recording of this video, showing a little bit of promise. And gold has been hovering around $1,200 and it's edged up above there. But how's it going to play out this week? And what's going to happen? Well, let's take a look at two different articles. The first one is from Market Watch, and let's see what's going to happen. Gold prices have edged higher as dollar finds little traction ahead of Wednesday's Fed decision. So that may mean that gold may go up. There's another article that talks about how it may go down. Yes, so the yellow metal has logged a fourth gain in 5 sessions, and silver has climbed. Gold futures eked out back-to-back gains Tuesday as the dollar index softened ahead of the Federal Reserve decision, which could yield a third rate increase of the year. A negative development for gold because it can bolster the dollar. December gold rose 70 cents, or less than 0.1%, to settle at $12.05.10 an ounce, gaining as the dollar index traded a little, changed at 94.155. The dollar and gold, which is chiefly priced by the U.S. currency, tend to move inversely. Gold prices based on the most active contracts have declined by 8% so far in 2018, while the dollar index is up about 2.2%. Higher interest rates tend to boost the dollar and cut demand for non-yielding bullion in favor of assets delivering an attractive relative yield. Yet gold gained modestly Tuesday, even as the 10-year Treasury yield approached 7-year highs. Fed policymakers' two-day meetings ends Wednesday, and market is priced an over 90% chance of a quarter-point rate increase. The market is penciling in 4 rate increases for 2018. However, traders have shown some flashes of wavering confidence amid trade spats and signs of a global economic slowing. The rate hike has already been priced in, but gold traders will be on the lookout for insights on economic projections, and Chair Jerome Powell's news conference, said Alfonso Esparza, senior currency analyst at Oanda. A neutral to dovish speech from Chair Powell could boost gold prices, especially if it comes from more mentions of a trade turmoil risk, and I tend to agree with that. I think that's probably what's going to happen, because the price is already baked in. It goes on to say that so far gold has struggled as a safe haven under trade war concerns as investors have flocked to the safety of the U.S. dollar, putting downward pressure on the yellow metal. And metals market are largely already looking past this Fed decision. Some strategists think the market's ability to hold $1,200 for roughly the last 2 weeks is potentially significant. When it comes to long-term perspective, I believe I'm still holding bullish views about the precious metals, says Naeem Aslam, chief market analyst with Think Markets. Midterm U.S. elections, geopolitical tensions around the globe, and most importantly, the deteriorating situations around the U.S. fiscal balance are all going to provide a strong tailwind for the metal to continue to move higher. It could easily touch a level of $1,500 by next year. And most of you know that I've made a prediction that it will probably go up to $1,300 or more by the end of this year. And that's become a bold prediction, by the way. I don't have no skin in this game, but it's fun to make predictions as such, but I'm by no means an expert. But this prediction is by the end of next year, so we'll see. But I do think gold will probably maintain where it is or go up a bit higher because of the reasons stated there. Talking about silver, added 1.1% to $14.49 an ounce, and copper slipped to $2.82 a pound. Palladium again marked its highest settlement since Friday, buoyed by long and short-term expectations for stronger global demand. And 1,053, you know what? You may come a time where palladium may go up higher than gold. The way things are going, we shall see. And platinum it's fell a little bit here. It's going to be interesting to see how it plays out. So this article thinks that gold is going to stay stable or go up a bit here. Whereas we have another article that says that the gold price appears to be set for a fall to $1,130. Gold plunged in late August to a dip of 1168. Historically, such dips would have been followed by a rapid rebound, but that hasn't happened. Instead, there has been a period of sideways consolidation. And you'll remember an article I posted earlier in the year about $1,100 gold. We suggested in August that traders who went short gold in May were beginning to consider covering their short positions. The consolidation over the last few weeks has triggered short covering, but it has not encouraged new long positions. When the gold price rebounds, it tends to go rapidly without any consolidation activity. The gold price is characterized by trend rebounds from pivot point lows, in this article from CNBC. Those are steep and rapid rebounds that have the characteristics of a short-term rally, but also have a habit of developing into longer-term sustainable trends. That is not developed. Gold made a plunging low in late August with a dip of 1168. Historically, such dips have been followed by a rapid rebound, but that has not developed. Instead, there's been a period of sideways consolidation. Evidence of a potential pivot point rally rebound includes two features. The first bit of evidence would be a slowing of downward momentum. The range from low to high for the week is significantly smaller than the previous weekly ranges that did develop. There we go. We can see the weekly movement here. The second feature indicating a potential rally would be a fast rebound with a significantly larger weekly low to high range. A large green candle that follows is a very much smaller red candle. That did not develop and is a key clue to the continuation of the downtrend. In other words, a consolidation pattern is a pause pattern rather than a reversal pattern. Maybe you consider it a long, slow death for the kitty. Maybe the kitty's not bouncing. Maybe the kitty just kind of laying there a little bit, instead of the dead cat bounce. Short-term group of averages in the Guppy multiple moving average indicator were well separated. That shows traders are not optimistic about potential for a trend change. The long-term GMMA has crossed over and continued to develop a steady separation. Those are bearish features and signal a continuation of the current downtrend. The downside target is near 1130 and is based on the value of the previous pivot point low rebound recovery in 2016. Traders who covered shorts and consolidation developed will now look to open short position again at the price dips below 1180. Now, the reason why I bring up these two articles is one is to kind of show the opposing view, which I think is important when looking at the markets. So you have this view here that basically talks about some technical analysis, but also talking about political and markets outside of just trends and chart reading that this article from CNBC does. And that being the case, I think a lot of times you have those two different worlds, and they kind of operate in silos with their analysis and their points. This is a highly technical, talking about the short-long positions and looking at candles and the analysis of the movement of the charts and how it's trading sideways, and typically what happens based off the trends and looking at all the different intricacies of these. And it's valid. It's a good point for sure, especially when it comes to short selling and long buying, trading. But you have to take into account the other factors too. What I will call the mini black swans. Very, very many, very, very minute little factors that have a psychological effect on the market. For instance, when Rod Rosenstein was floated to be possibly losing his job, that affected the markets. Really has not much to do with economic news. It has to do with political news. But nonetheless, politics plays a part. Politics can certainly play a part in the gold and silver prices. And, the other thing, too, we're going to have midterm elections coming up. I believe the Democrats take control of one or both houses, that we're going to see the markets move. And I believe that gold and silver will go up higher, because that means that there's a much less of a chance of the tax cuts remaining permanent. And and other factors that are going to cause more havoc in our political system, as if there's not enough of that already. But very interesting indeed. So post your thoughts below. Is gold going to go down? Is it going to trade sideways? Or is it going to go up? You can predict all three and be right in one of those, but pick one for goodness sake. Let's have some fun with this. I don't take myself too seriously in my predictions. I'm going to stick with them. What the hay bale. Gold, close to $1,400 an ounce by the end of the year. Silver, close to $20 by the end of the year. Yeah, 6 months ago that wouldn't have been crazy. Now it's crazy. I don't care. It's fun. You know, because in the end, we stack these precious metals because we understand their value. We understand in the long run they're going to preserve their wealth and help bolster our positions as our own central banks. And that's what it's all about. Post your thoughts below. Would like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.